Today we are going to talk about Microsoft, Nvidia and Apple, because the three tech giants combined have just crossed the $10 trillion mark. We will discuss what this means for investors, the outlook for this group of stocks, and a couple of questions that you need to address if you own one of these three tech companies. So without further ado, let's get started. Alright, hi there, my name is Bernie Zellman, and let's start by taking a look at the market capitalization of the three tech giants introduced in the introduction of the video. So, in rank number 3, we've got Nvidia with a market capitalization of $3.3 trillion. Then in rank number 2, we've got Apple with a market capitalization of $3.465 trillion. And the most valuable company measured by market cap as of today is Microsoft with a market capitalization of almost $3.6 trillion. And if you now add these three figures up, you get a combined market capitalization of $10.355 trillion, which is absolutely insane. If we just go back 5 years from now and someone would have told you that the three largest companies combined would cross a market capitalization of more than $10 trillion, I think few people would have believed you. And just to put the enormous size of these three companies into perspective, let me share a few fun facts here. So first of all, the $10.3 trillion I was just talking about represent almost 22% of the entire S&P 500's market cap. So if you take all of the 500 S&P members, add up their market cap, and this is including the three largest companies, well, Microsoft, Apple, and Nvidia, they represent 22% of this overall pie. Then another interesting statistic, the $10 trillion, that's basically equivalent to 3.7 times the GDP generated by France, or by French citizens, I should say. And for context, France is the second largest economy in the EU. The largest economy in the EU is Germany, with a GDP of around $4 trillion. So again, the market cap of Apple, Nvidia, and Microsoft combined is 2.5x the GDP of Germany. So put differently, this means that this group of stocks is worth as much as the value generated by all German citizens over the course of a 2.5-year period. Now, I frequently come across these market cap to GDP comparisons, and I just shared two of these comparisons myself. But let me just briefly explain why I think these comparisons aren't particularly valuable. So what you have to realize is that the value of a company, that value is not based on the earnings power of that particular business over the course of a year, 1 year time span. No, the intrinsic value in theory is the value of all future cash flows discounted back to present value. So I don't think it makes much sense to compare the market capitalization, which in theory again should reflect the true intrinsic value of a company, to the value creation of citizens in one country over the course of just 1 year. So with that being said, let's actually have a look at the earnings produced by these three tech giants. So I'm just going to stick with earnings here for a second, because I think the visualizations shared on the website companiesmarketcap.com are just incredibly stunning and beautiful. I think they help to visualize where the companies are currently ranked. So we just saw they are the three largest companies measured by market cap. In terms of the earnings produced by these businesses, the picture looks a little differently. You can already see that Microsoft, Nvidia, and Apple, they are no longer in the top 3 spots. And especially Nvidia is ranked a little lower. So according to this data set, Apple produces earnings of $120 billion, Microsoft produces $105 billion in profits, and Nvidia generated an income of almost $50 billion. And the fact that these companies don't appear at the very top when it comes to their earnings power, well, this already shows that there's more to valuation than just the current earnings produced by the business. No, another critical component is growth, of course. And as the numbers on this website, as beautifully as the table illustrates them, are a little off in my opinion. At least I double-checked them with Ticker, and the numbers are a little different here. Let me also just share the 2024 net income estimates for these three tech giants. So we've got Apple, which is supposed to generate $101 billion in profits in its 2024 fiscal year. We've got Microsoft with $88 billion and Nvidia with $67.5 billion. And if we now just combine all three profit figures, we get a total amount of $257.3 billion in profits, which relative to the $10 trillion in market cap represents a price to earnings ratio for this basket of stocks of around 40 times. So in layman terms, so just to make sure that everyone can follow along, this means that if Nvidia, Apple, and Microsoft would decide to distribute all of their earnings back to shareholders, it would take them 40 years until you get your initial investment back. Assuming, and that's important, that these companies wouldn't grow in the future, which obviously is not the case. At least probably not for all of these companies, but we'll get to this a little later today. Now, just to wrap up this kind of brief discussion of the current valuation multiples these companies are trading at, let me just show you the next 12-month earnings multiples of each company individually. So as you can see, they are all trading at more than 30 times their next 12-month earnings, and Nvidia even crosses the 40 times threshold. So as I tried to hint at already, in order for the current prices of these tech giants to make any sense, they need to grow. And they probably need to grow at double-digit rates if you want to achieve at least kind of a market return of say around 10%. And they need to sustain that double-digit growth for quite some time, despite the size that they have mostly already achieved. Because otherwise, well, you will end up with a below market return. And we're not even factoring in a possible compression of the multiple. So if the multiple comes down, of course, this will eat into investors' returns. So how do we get here in the first place? How do we end up with these three tech giants combined trading for market capitalization above 10 trillion US dollars? Well, I think it can all be explained with the two magic words that everyone is talking about right now. You guessed it, artificial intelligence. So if we just look at the performance of these three stocks over the last 12 months, we can see that Apple is up 22%. We've got Microsoft up 41%. And of course, the stock everyone is talking about right now, Nvidia, is up an astonishing 221% over a 1-year period. But as I've tried to address in a previous video of mine, my video on Nvidia, I think the return that many of these businesses can expect from their investments in AI. And obviously, Nvidia itself is a beneficiary of other companies investing into their AI infrastructure. Well, the return, I think, is super hard to predict. And I would argue that these companies themselves probably don't really know whether they will end up with a satisfying return on these multi-billion-dollar investments. And quite recently actually shared an interview clip, I think it was a podcast, with the CEO of Anthropic. So one of the, I guess it's fair to say, leading AI companies. And I found his take quite refreshing because he was humble enough to admit that even he, as the CEO of an AI company, doesn't really know where we're going over, say, the medium to long term. So let me just show you that clip real quick.
Who will make the most money on AI? Will it be the chip manufacturers, or will it be you guys, or the scalers, or all the consumers, or companies?
My boring answer is that I think it's going to be distributed among all of them, and that the pie is going to be so large that in some ways it may not even matter. Like certainly right now, the chip companies are making the most money. I think that's because training of models comes before deployment of models comes before revenue. So I think the way I think about it is the valuation of the chip companies is a leading indicator. The valuation of the AI companies is maybe a present indicator, and the valuation of lots of things downstream is a lagging indicator. You know, if I think about that, again, like speaking very abstractly and conceptually, what's that driven by? Probably that's driven by like anticipated demand. Like people are building very large AI clusters. Those clusters involve lots of revenue for Nvidia. Presumably, companies like us are paying for those clusters because they think that the models they build with them will generate lots of revenue, but that revenue is not present yet. And so what we're seeing so far is just, man, people want to buy a lot of chips. And of course, it's possible. It's consistent with the whole picture that all of this will be a bust. The models don't turn out to be, that powerful. Like companies like Anthropic and the other companies in the space don't do as well as we expected because the models don't keep getting better. That always could happen. That's not my bet. That's not what I think is going to happen. What I think is going to happen is that these models are going to produce a great deal of revenue, and then there's going to be even more demand for chips. Nvidia's value will go up. The AI company's value will go up. All these downstream companies, that's the bullish scenario that I'm betting on by leading this company. But I'm not sure. It could go the other way. I don't think anyone knows.
So I think a few questions that you need to answer if you are currently invested in Microsoft, Nvidia, and or Apple, or if you are considering investing at the current levels are. I came up with a list of 4 or 5 questions in total here. So first of all, to what extent does the success and growth of the business depend on artificial intelligence? Secondly, how much can be earned with it? Thirdly, how will this technology shift affect their business model specifically? And finally, to what extent does AI expose the business to the risk of being fundamentally disrupted? And what's the downside risk for this particular business? So I actually want to challenge you here. Please write down in the comments down below, pick one company and then share a bear case, a base case, and a bull case for this company. So for Microsoft, for example, what's maybe a more bearish outlook when it comes to their AI investments? What's maybe a base case and what's the bull case? And what does it mean for the stock going forward? And before I move on to my personal thoughts, I want to recommend a podcast that I recently come across. It's once again from the Invest Like the Best podcast. And it's an episode titled Entering Uncharted AI Territory with Martin Casado, who apparently is like an AI expert. And he himself in this podcast made the point clear that I was trying to make, that forecasting where we're going to go with AI is like, you just have to be humble enough to admit that you probably cannot predict it with any degree of accuracy at least, which of course is super exciting. But for an investor, predictability is one critical component when it comes to making investment decisions. If you cannot predict the possible future trajectory of a business, well, you cannot invest in it and should move on to, a more predictable business. So what do I think of this basket of stocks? Apple, Nvidia, and Microsoft. Well, I think there is no doubt about the fact that we are looking at 3 incredibly high quality companies. However, personally, I have my doubts whether the business quality we are looking at justifies the current prices these companies are trading at. And quite frankly, why would you assess this group of stocks as a basket? It makes more sense to assess them on a company by company basis. And even then, I wouldn't be a buyer of any of these stocks at the current prices. I'm happy to miss out if they continue to perform well. But I think if we look back at these stocks 5 years from now, I don't know. I don't have a lot of conviction that you will end up with market-beating returns. But of course, I may be wrong. I think there's the real risk that the kind of momentum will be lost over this, say medium-term time period. If someone would put a gun to my head and force me to buy one stock, I would probably be most bullish on Microsoft. It's the most diversified of the 3 companies. It's probably the highest quality business as well. It's run by a fantastic management team. And while the price is certainly high, it's not like crazy high. And I can totally see why people who are already invested in Microsoft are not selling at the current levels. Then when it comes to Apple, I would be a bit more cautious because they have really experienced a slowdown in their sales growth. In fact, sales or revenue has been declining over the more recent quarters. And Nvidia, well, I covered this stock in an entire video. Obviously, this business is running on full steam right now, but I have my doubt regarding the sustainability of the success that Nvidia is experiencing at the moment. So just to sum up, I'm of course not predicting a top for these businesses here. That's not a game I'm playing, but I don't see a lot of value in these stocks at their current prices right now either. So that's it for today. Let me know what you think of these 3 stocks in the comments down below, and I'll see you in one of my next videos. Take care.